Good morning and welcome to Weekly Insights with John Plassard. Despite many headwinds, war in Ukraine, return of the COVID in China, higher inflation, inversion of the yield curve, or aggressive monetary normalization, the financial markets keep on rising. Since the outbreak of the war in Ukraine, for example, the S&P 500 has risen by almost 7%. Several arguments explain this counterintuitive movement. Firstly, investors are reducing their holdings in bonds to go into the stock market. Secondly, several large funds and hedge funds are aggressively selling bonds and credit and moving back into quality, technology, and US dividends. Then individuals have started to buy stocks again, which is a real weight for the indices. Let's recall that US households have $15 trillion in cash holdings. In addition, we can add that for almost a month and a half, we have seen one of the largest movements of repatriation or migration into the US stock market on record. Foreigners also coming back to the US. Computer programs such as CTAs are also a strong argument to explain the recent upward movement of indices. At the same time, it should be remembered that corporates are still the biggest buyers in the market, the so-called share buybacks. Net demand, buybacks excluding insurance, should reach a record level of $700 billion this year. And finally, market sentiment, that is a contrarian indicator, remains below the COVID period on March 2020 lows. So counterintuitively, the rally could still continue somewhat. Keep in mind that April is a strong seasonal month. Over the past decade, April's average return was 2.34%, the second best month of the year after November. However, watch out for volatility that could cause further declines or profit-taking in the coming weeks before the market rallies again. Always remember that diversification is the key to success this year. Thank you very much. Have a great week, stay safe, and keep on winning.